All right, I think that most people have gotten into the room now, so I will get this started. First off, I want to thank everyone for coming. Introduce myself quickly. My name is Jared Wilk. I am the president of the Greater Boston Association of Realtors in 2024. I am obviously a fellow Realtor, and I want to remind you, for those who haven't been to a Realtor meeting, the purpose. These Realtor sessions are free and they're your member meetings. So when we're in person, these sessions have an educational and networking component and are presented in multiple regional locations. But even though we're on Zoom, we welcome and encourage suggestions of topics and speakers for future sessions. In terms of for today's meeting, if you have specific questions, you can put them in the chat box, and we'll be going through those. But what I want to also acknowledge are a few people before we get started. This year's officers of the GBAR leadership team are Mark Triglione, President-elect, Jocelyn Malcasian is the Vice President, Jamie Thompson is our Treasurer, Dino Confalone, the MAR Greater Boston Regional Vice President, Allison Socha, who's our immediate past president. I also want to recognize our DEI Chair, Bonnie Lai, and Vice Chair, Roe Bieberstein. Thank you all for your service and commitment to helping better our industry. As a reminder, April is Fair Housing Month, and we aim for equal housing opportunities for all. In fact, our own member, Paul Yorkis, was recently named one of the National Association of Realtors 3 Fair Housing Champions, and will be formally recognized at the NAR mid-year legislative meetings next month in DC. For all who know Paul, we're very excited for him and appreciative for all he does. Today, we're going to hear about 6 different buyer financial assistance programs that help first-time, low-income, and minority buyers purchase a home. Our panel will detail down payment programs, mortgage loan products, and other financial assistance resources available in the local market to help make home ownership more affordable. Additionally, we'll hear about the state's rental housing voucher and rental assistance for families in transition programs, and a new rapid housing initiative launched this spring. We'll also hear from GBAR Executive Director John Dolczewski on how we can all be using our latest member benefit, the Agent EDU online training platform. So without further ado, our presenters are Elliot Schmiedel, Director of Homeownership, Massachusetts Housing Partnership, and Antonina Fenelon, Director of Stash First Gen Home Program at the Massachusetts Affordable Housing Alliance, Karen Rabaza, Deputy Director, Boston Home Center at the Mayor's Office of Housing, Caitlin Mulhern, Homeownership Programs Manager, Federal Home Loan Bank of Boston, Angela Newby, Senior Relationship Manager, Mass Housing, and Josh White, Chief Programs Officer, Metro Housing Boston. Thank you all for being here today. What we're going to do is we're going to let each of them speak for a bit, and then we'll get to the Q&A session. But before we do that, I would be remiss not to recognize our webinar sponsor, Metro Credit Union. Metro Credit Union are longtime supporters of GBAR. In fact, Deb Frank from Metro Credit is a 2-time recipient of our Affiliate Member of the Year award. So thank you for sponsoring today's session. All right. For questions, we're sure, as I said, a lot of you are going to have questions in the panel. So again, if you can put them in the Q&A box down below, we will address as many as we can once the presentations have concluded, and this will help ensure each speaker has enough time to present. Also, if you see a question in the Q&A box that you'd also like to hear an answer to, please select the "and" with Zoom's upvote feature. Lastly, we are recording today's session, and we'll distribute the video later this week via email along with each of the presentations. All right, so now let me introduce you to our first speaker, Elliot Schmiedel, Director of Homeownership, Massachusetts Housing Partnership.
Folks able to see that presentation okay?
Yes.
Great. All right. Thanks, Jared, for introducing me, and thank you to GBAR for having me. I'm happy to be here to talk to you all today about MHP's homeownership program, specifically our One Mortgage and One Plus Boston programs. So what, first off, what's MHP? We're the Massachusetts Housing Partnership. We're a quasi-public state agency. been around for over 30 years. And our primary goal really is to increase the supply of affordable housing throughout the state of Massachusetts. We do this in a number of ways. We work with state and local government very closely. We come up with new innovative financing tools for both rental housing and home ownership. And, you know, behind that all is a real effort to promote racial equity and serve underserved borrowers, those who without programs like ours would find it very difficult in an already very difficult state to find a place to live. We have a few teams that make up MHP other than the homeownership team. We've got the community assistance team that works closely with communities, nonprofits, housing authorities, really to drive the conversations, change the conversations around affordable housing. In a state like Massachusetts with 351 cities and towns, there's a lot of local rule, and they find it very, very critical to work closely with as many communities as they can. Rental financing is going to work with nonprofit and for-profit developers to finance affordable rental housing throughout the state. Our Center for Housing Data is the newest team in MHP, and they work closely with everybody here. They've created a number of different tools on our website, DataTown, Todex, Residentity. They do research, write policy briefs to, again, further the conversations, inform them with data. And then there's a homeownership team. That's the team I lead at MHP. And we'll talk about some of our core programming here today. So first off, you know, folks on the call might be familiar vaguely with One Mortgage. What is it? It is an affordable state-sponsored mortgage program designed specifically for low and moderate income first-time home buyers. It is the successor to a long-standing program called the Soft Second Loan Program. Together, since 1991, those two programs have served over 25,000 first-time home buyers. You know, the program was born out of a leaked report that detailed racial discrimination in mortgage lending in the Boston area back in the late 80s. And community partners, bankers, the state, local officials came together and created this program as the solution. And almost 35 years later, we have achieved a lot of success in and amongst those 25,000 home buyers. So I'll talk a little bit about what makes the program unique. These are some of the key features. So as you're talking to, you know, prospective first-time home buyers, you want to be informed as to how this program could help them. Here's how. First off, there's a low down payment requirement. If you're looking to buy a condo, a single or a two-family property, folks need 3% down, and only 1.5% of that has to be their own funds. More and more, obviously, as we're talking about here today, folks are using down payment assistance, and that down payment assistance can come in with at least the other 1.5. For three-family properties, folks do need 5% down, and 3% needs to be their own funds at the time of application. There's never any private mortgage insurance or PMI with a one mortgage loan. That is a huge part of what the state funds are going to supplement. So borrowers are able to save hundreds of dollars a month. And instead of private mortgage insurance, MHP manages a loan loss reserve or sort of a shared risk pool with our lenders to mitigate credit risk. There's a low fixed interest rate. So everybody who gets a one mortgage loan is getting a discounted interest rate right off the bat. Our lenders offer a 30 basis point discount off of the weekly Freddie Mac rate. So every Thursday, Freddie Mac's publishing their 30-year fixed rate. I think it was a little over 7 last week. And if you were to apply for a one mortgage today, it'd be 30 basis points off of, at least 30 basis points off of that Freddie Mac rate. And then lastly, another piece of the state funding behind this program is going to pay for interest subsidy to help qualified buyers reduce their interest payments over the first 7 years of ownership. And the real benefit there is that it's going to help them qualify for more home. In today's market, that's sorely needed. And because we're qualifying them and our lenders are qualifying them on a subsidized payment, year one payment, helps stretch their dollar a little bit further. And that subsidy is always 0% interest, repayable upon refinance or sale. We do often subordinate to folks who request a subordination. I'll quickly run through eligibility. This is a first-time homebuyer program. We define a first-time homebuyer as somebody who has not had an ownership interest in a primary residence for at least 3 years, or a property in 3 years. Our lenders typically are collecting 3 years tax returns, making sure there's no evidence of mortgage interest deduction, real estate tax deductions, things like that. Folks need to complete first-time homebuyer education, super important. We have some education partners on the call with us today that you'll hear from. There's over, God, I think 45 CHAPA-approved lenders throughout the state of Massachusetts, almost all of which at this point are offering classes via Zoom. It's very easy for borrowers to attend, and the classes are invaluable in helping them become prepared homebuyers, informed homebuyers, and making sure that they can do so responsibly. Household income, we do have income limits. We just released our new 2024 income limits last week. They did rise about 5 to 6% over the previous year. We based those income limits off of the income limits that HUD releases. But our program is capped at 100% area median income for the associated household size. On our website, you can pull up a list of all the towns in the state and determine based on the household size what the income limit for that family would be, or that household would be. And then we have an asset test that says borrowers need to have less than $75,000 in liquid assets. This includes savings, checking, stocks, bonds, gifted money, all of that stuff. Retirement savings are not included, so we're not going to count folks' 401ks, 403bs, IRAs, retirement funds as part of that 75. Yeah, so that's borrower eligibility. I want to stress this. There's been a lot of conversation lately about how expensive things are getting and how difficult it is for low and moderate income buyers to qualify, basically. And the talk has been about layering programs, putting programs together to help realize the benefits. And MHP works very well with a variety of programs that you're going to hear about today. Very commonly, folks are receiving municipal down payment assistance, federal home loan bank funds through several of their programs, match savings, the stash program, FSS. We work with Section 8, Habitat for Humanity, and others. So I just want to emphasize that point as you're looking to pair assistance programs together. Just a little recap here of who we served in 2023. This is just a look back of the 622 loans we did. About half of them were to households below 80% AMI. 70% were to BIPOC households. Again, this program has a long-standing history of serving BIPOC buyers, and our numbers have been very strong in recent years. And you can see here the breakdown between gateway cities and Boston. And I'll talk about the One Plus Boston program briefly in a minute. But that program has allowed us to really up our volume in Boston and help those low to moderate income buyers who would have been priced out very easily, leverage the benefits of the program to buy. So proud of that number for sure. Speaking of One Plus Boston, and I'll get into this in a minute, we did 196 loans in 2023 under that program, and that's a program that is a partnership between MHP and the Mayor's Office of Housing, and Karen may touch on this in her comments as well. The program features all of the great things that I already talked about, but builds in a structured interest rate discount of either 100 or 200 basis points, depending on income level. So these are the best interest rates in town. You take that already reduced 30 basis point reduced rate, and depending on their income level, subtract either 100 or 200 basis points. And our lenders, we have about 12 lenders offering the One Plus Boston program. I think all total, since the program launched in late 2020, we've done over 500 of these loans. And the interest rate, down payment assistance is wonderful, and there's a lot of new programs. We've administered down payment assistance through Mass Dreams, but rate reductions get to another core problem, and that's monthly affordability. That's the monthly payment. That's the DTI. And it's going a long way to help bridge the gap between where people can afford and what the properties are priced at. So Karen may share a little bit more about One Plus Boston, but we've got information on our website, and a really great program that we're looking to take beyond Boston in the coming year. We really want to work with other cities and towns to bring the benefits of One Plus Boston to more communities. So with that, that was my timer, 10 minutes. Feel free to contact us, our Senior Business Development Manager, Suzanne Cameron. That's her email. If you have questions, if you'd like trainings, if you'd like materials, we're happy to help. With that, I will stop sharing and wait for questions. Thank you.
Elliot, thank you so much. What we'll do is we're going to, before Karen goes, we're going to wait and let everyone speak before we do our Q&A session. But I would ask of folks that there's some people putting questions in the chat box. There is a Q&A section at the bottom of the screen as well. So where it says the chat box, 1, 2, 3 slots over than that, 2 or 3 over from there's Q&A, and that's where you can put your question. And if someone else asks it and you want to re-emphasize the question, that's when you can click to move that up, or the and button. So with that, let's move on to Karen Rabaza, Deputy Director at the Boston Home Center.
Thank you. Let me share my screen. Okay, can everyone see my screen? Okay.
Yes, we can. Thank you.
Okay. So thank you, Jared, for the introduction, and to GBAR for this opportunity. We're really happy to talk about our programs. You know, Mayor's Office of Housing, and especially Mayor Wu, she understands that right now it's very hard to buy a home in Boston. It's unaffordable, but you know, when you have these programs, down payment assistance, that could actually assist and help homeowners, home buyers to really navigate the purchasing. So down payment assistance is really becoming vital for the residents in Boston to be able to afford and maintain, sustain Boston. So our mission for the Boston Home Center, and we call it as a one-stop shop because we really have so many programs when we help Bostonians buy, repair, and retain their home. And we offer several programs for home buyers and homeowners. So for home buyers, we offer down payment and closing cost assistance. We host monthly workshops and sponsor first-time home buyer courses through our nonprofit partners. We also have our neighborhood housing initiative, which is a lottery program where we, you know, construct really new moderate price homes. And we also have a credit booster program. And we always, you know, want to hear, especially from realtors, because the market is changing, and we always want to see what the barriers are. And so far, you know, there are so many challenges. Credit booster, it's one of the programs that we created as we understood that having a good credit, it's a barrier for home ownership, and especially to qualify for the first time home buyer program. So through the partner agencies, we have an incentive program for this credit booster, and all of these programs could also be found in our website at the homecenter.boston.gov. So, and for the homeowners program, we offer a homeowners health program, which is a repair program for a home, our senior home repair. We also have our Let's Save program, and then we have the foreclosure prevention and intervention counseling program. So we are very successful in all the programs. And again, we always try to, you know, enhance our programs to better serve Bostonians. So I'm going to be talking about the home buyer assistance programs. And so far we have 3 programs. We have our traditional financial assistance program, and this program could be used with any mortgage product, from mass housing through FHA, through a banking portfolio program. And I will give you more details about that. And then we have the One Plus Boston Financial Assistance Program that Elliot mentioned and gave you an overview. And this program provides down payment assistance and also provides the enhancement for the interest rate buy down, which is a great for Bostonians to use. And For the traditional assistance program, we go into higher limits than the One Plus Boston, so I will give you more details about that. And then we have the BHA Homeownership Program. This is a program that we are working in conjunction with the Boston Housing Authority for the Section 8 voucher holders and the homeownership program. So again, you can find all of these programs and in our website at thehomecenter.boston.gov. So our home buyer assistance program, this is a very general overview of all our financial assistance. Our financial assistance, it's a grant, it's not a loan. One more thing to keep in mind is that we don't need a purchase and sales for someone to qualify for this financial assistance. And in fact, what we want is we want to see home buyers going into the city of Boston and see if they could qualify for this program based on income and assets. Because we want to see that they know how much they qualify for the assistance in order to purchase that home. So we don't want to delay the process. We respect really, and we honor contingencies and closing dates. But, you know, the sooner we get those clients in our door, the better they will get, the sooner they will get qualified. But again, it's not a grant. It's a grant, it's not a loan. You have to be a first-time home buyer. So what that means is that they have not had an interest in a residential property within the past 3 years. They have to have a first-time home buyer class, like Elliot mentioned. They have to obtain a pre-approval from a participating lender. We have about 22 participating lenders. 12 of those are One Plus Boston lenders. And then we have some mortgage companies and also some other lenders that are registered in our list. This program qualifies, and all of our programs actually qualifies to buy a condominium, a single family, a 2-family, or a 3-family home. The property must be located in Boston, and it should be the buyer's primary residence. So they have to live in Boston. This is important. We contribute. So 1.5, we ask for the homeowners to contribute at least 1.5 of their own funds to purchase a property. And at least 3% of their own funds if they're buying a 3-family home. If the buyer pays more than 1.5, which is sometimes it's good, but we don't pay cash back at closing. We don't reimburse the buyer if they're putting 3%. So the goal is for the buyer to really put down 1.5% so we can cover the rest of the 1.5%. And the same thing with the 3 families. If the mortgage program requires 5% down, we're asking to put 3%, and then we will cover the other 2% at the time of the closing. A lot of times people are forced to put the 3% or the 5%, and unfortunately, we're not allowed to reimburse for those for that investment into the property. So it stays on the property. So the buyer's household assets cannot exceed more than $75,000. So we have very similar guidelines as MHP, and this includes Roth IRAs, but not including restricted retirement accounts for this programs. So again, we have 22 participating lenders, and they are very familiar. And they have direct contact with the Boston Home Center. So you can go to our website and really find these 22 lenders. So for our regular traditional financial assistance, we go up to 135% of AMI. For those buyers that are above 100% of AMI median income, and this is just an example of the 135% of AMI, we do $35,000 or 5% of the purchase price, whichever is less. And for those that are below the 100% of AMI, we do up to $50,000 or 5% of the purchase price, whichever one is less. We also cover closing costs. The income limits here are for 2023, and they change every year. For our traditional financial assistance, we follow HUD income limits, and we usually tend to change those numbers by mid-July or the first week of July of this year. We also have a special program for Austin and Brighton. So residents that are buying in Brighton, they can get up to $50,000 in grant or 5%. This is an additional resource, and it's made possible with funding from the development of Allstone Yards. And again, it only qualifies for Allston or Brighton. And we follow the 135% of AMI. And again, these ones are the income limits for 2023 that are subject to change this year. And very quick overview, as Elliot mentioned, the One Plus Boston Financial Assistance. This program is in conjunction with MHP, and the benefits that we provide is that they can receive 5% of the purchase price plus closing costs. And again, is to buy a condo, single family, two family, or a three family. In addition of that, our clients, depending on the AMI level, they can obtain a 1% to a 2% interest rate discount for those. And with the total between down payment assistance and interest rate discount, buyer's grant plus that interest rate cannot exceed $75,000. So the goal of this program is really to allow home buyers to be able to afford and increase their purchasing power, but lowering the interest rate. So it is a really great program. So this is one of the program requirements that we need for this, is that we need to see that proof that the buyer is the City of Boston resident, or they're currently working in the City of Boston, or they were in the City of Boston resident in the past 2 years. And this is something that the Boston Home Center will verify and will work with the homeowner, with the home buyer. It must meet the qualifications for the One Plus mortgage product, including the One Plus income limits. This is the 2024 income limits that you see on the screen that Elliot mentioned, and you can also find more information on their website. And they have to work with one of our One Plus Boston participating lenders that you can also find in our website or on the MHP website. And then we have the Boston Housing Authority Homeownership Program. Maximum household income limit is 135% of AMI. They need to obtain a referral from the Boston Housing Authority to participate in the program. And this is a program that constituents are really receiving a maximum of the $75,000 for down payment and closing cost assistance. And this also includes an interest rate subsidy. This program could be used with all the programs, including Mass Housing, the One Plus Boston, the One Mortgage, any other programs or portfolio programs that the banks offered, but they do have to participate. They have to be part of the 22 programs. This is a very successful program. So far, we had helped about 35 new homeowners with voucher holders. And I will say that at least 55% of those are usually buying market rate properties. So it's really a very successful program. These are the neighborhoods that we covered. I know that the City of Boston, sometimes people could get confused thinking that, you know, Chelsea or Winthrop are part of Boston, but we always provide the slide. I love it because it shows all the neighborhoods that we covered in the City of Boston. And I will be happy to share the slides whenever, if you guys need it. So we always ask to keep in touch. We know that, you know, being in constant communication with your clients is important, helping them navigate through successful programs, and, you know, it's important. So we always ask you to stay in touch with us, and you know, really recommend your clients to stay in touch with the Boston Home Center and just remind them of the programs that we offer, like the HomeWorks Help Program, the Senior Home Repair, Let's Save, and the foreclosure prevention. And now it's coming more of the ADU, which is the additional dwelling unit, which we will be, you know, having a program. We have a pilot program in Mattapan for homeowners, and the goal will be to really extend zoning and ADU through the city in the next year or so. So that's pretty much about my slides. The contact for our offices there is the homecenter.boston.gov. The best, if emailing questions, you have scenarios, we will be happy to talk to you about it. you want to know more about our programs, we can leverage our financial assistance with other financial assistance programs to really increase the purchasing power, like with the FHLB grant, any, union down payment assistance, work assistance, gifts, you name it. So we're very flexible. Our goal is really to help homeowners navigate the process of owning a home and in the city of Boston. So thank you so much, and I will stop sharing.
Karen, thank you so much. This is more great information coming across, and people are asking great questions. So thank you. We will get to those. Antonina Fenelon, as a reminder, the director of Stash First Gen Home Program at the Massachusetts Affordable Housing Alliance. You're up.
Thank you so much. And thank you to Jared and GBAR for having me this morning to talk about Massachusetts Affordable Housing Alliance, but also the Stash program.
You're welcome.
Oh, sorry, just one moment. All right, are you seeing that presentation okay now?
Yes, thanks.
Wonderful, thank you. So good morning, everyone. This is the MAHA Stash First Gen Home Program. We are a part of the Massachusetts Affordable Housing Alliance. So MAHA is a 501c3 organization in Boston. We serve first-time home buyers anywhere across the state. So if clients are looking to purchase their home but are unclear about the home buying process and what they need to prepare for it, they would take a first-time home buyer course with us at MAHA. Our mission is to educate and mobilize to increase affordable home ownership opportunities, break down barriers facing first-time and first-generation home buyers, and also close the racial wealth gap here in Massachusetts. So we offer not only the first-time home buyer course, but also the homeowner, landlord, and condo courses. These are 2 additional courses that we offer on our website where clients can learn about what is the commitment that they're making when they decide to purchase a multifamily home. And also if they're going into condo, they want to make sure that they're tapping into educational resources that tell them all the ins and outs of purchasing a condo. Our landlord course, in addition to our condo course, are 2 courses that offer a home safe certificate, which allows for clients to get a discount of their home insurance. So great classes to take to send your buyers to MAHA to take either one of these 3 courses. In 2019, MAHA created the Stash First Gen Home Program. This was the first in the nation program that was based on first generation, first time home buyers. So similar to the concept of being a first time college student, we also have a program here that focuses on first generation, first time home buyers. So STASH stands for Saving Towards Affordable Sustainable Home Ownership. Now, this is our match savings program, as I mentioned, that is determined and focused primarily on first generation, first time home buyers being and getting the educational resources that they need to talk about financial literacy and home ownership topics. Clients are asked to save a minimum of $2,000 to get access to our grant. Now, you might be asking, why first generation? It's a race-conscious effort to really undo the historical issues that we've had in mortgage lending. It also acts as the bank of mom and dad. So for many first generation, first time home buyers, they don't have access to equity or parents that can give them down payment assistance. And so they can use the Stash grant as an opportunity for them to earn that down payment assistance. And in no way does first generation violate for housing laws. And we define first generation as an individual who has, in their lifetime, has never lived in a home. Their parents have never owned a home. If they did own a home, then they lost the home due to foreclosure. And also if a client is identifying as first generation, but their spouse owns a home, their spouse's parents own the home, then they would be ineligible for our program. So in essence, it's for first generation, first time home buyers anywhere in our state of Massachusetts. Now, the Stash has grown statewide as of October of 2023. And so clients can use these grant funds anywhere in the state. Okay, so if a client is in Boston, they can use the grant to purchase outside of Boston and inside of Boston. And this is a great stride for us. We're so excited that we have this opportunity to be able to offer these grants statewide. So if a client is looking to purchase a home in the city of Boston, they can get up to $40,000, or if they're looking to purchase outside of the city of Boston, they will receive a $20,000 grant. And specifically, if they're looking in Salem, there's a $25,000 grant. So what we do in our stash programs, we educate clients about the different down payment assistance, different mortgage products. You heard this morning from Elliot and Karen from the city of Boston, Elliot from MHP and Karen from the city of Boston, and they talked about their mortgage product specifically, but other resources. And so we want clients to be informed about the different resources that are available in the communities where they want to buy, and they can actually stack these grants together. Clients are able to use our grant, which is not a loan and it's forgiven on day one, to purchase a condo, single family, or multifamily home in Massachusetts. And as I mentioned before, this grant, along with other grants and mortgages, can be layered to make sure that we're meeting the down payment resources that this client needs. Just giving you some statistics here on our program. We have had a very successful program since 2019. We have over 600 clients who've participated in our program. 109 have been able to purchase both inside and outside of Boston, the average purchase price being $458,634. And so many of our clients, when they first join our stash program, are eligible for the MHP 1 mortgage or the 1+ Boston. So we really encourage clients to find a mortgage product that's going to be affordable for them so that they can remain sustainable homeowners. Clients can use this on lottery deed restricted units or market rate units. We want to make sure that clients are, again, purchasing homes that are affordable for them for the 30-year loan period. We're serving about 96% of households of color, predominantly people under the age of 40, and female head of households. So this slide is a little bit busy here, but it does just cover the eligibility requirements. So once a client is eligible for stash, they don't have to become re-eligible. We want clients to make sure that they are first taking a CHAPA certified first-time home buyer course, okay? And so that's MAHA, that is Urban Edge, that is many organizations who fall under CHAPA. Those organizations can be found at chapa.org. Once they've taken a first-time home buyer education course and have learned about what it means to buy a home, then they would be eligible to then apply for the stash program. They have to identify as first-generation home buyer, as I mentioned before, make a minimum of 45 per year, but not to exceed 100% area median income for their household, according to the MHP income limits. So the 2024 MHP income limits were just released, so clients can refer to that. But we also do our own pre-screening in-house to ensure that the clients are anywhere between 45,000 and the 100% area median income for the town and the county in which they currently reside. Clients cannot have more than 75,000 in assets, and we do want clients to come into our program with a pre-existing savings, okay? So if they have at least $3,000, we are asking them to save $2,000 in our own program accounts. And we want clients who are mortgage ready, right? And so we'll define mortgage readiness as an individual who is 1 to 2 steps away from being able to buy their home, okay? This client has good credit standing, might just need a little bit of down payment to get them into the home of their dreams. A client has good savings. They've created a budget, right? We're all about education. So we want to make sure the client feels confident moving forward in their decision to become a home buyer. There are educational hours that they have to commit. So it's 2 days of financial literacy and post-purchase seminars, which can all be completed within a month's time. And again, they're committing to saving that $2,000 to become eligible for up to $40,000 grant in Boston or $20,000 outside of Boston. So once the client has been eligible for our program, they would then become graduates, okay? So how the program works, clients are referred to our program from either housing counseling agencies that are on the CHAPA website. They're being referred by a realtor or a lender. Once they've been accepted into a program, they're committing to those 8 hours of education and graduating from our program. Once they've graduated from our program, they're going to identify a lender in a realtor of their choice to get their pre-approval and begin shopping for their home. Now, please keep in mind, these clients are walking out of our program informed about the best mortgage products in the state, are choosing and building their own team of experts along this journey to ensure their success towards home ownership. All right, so we do encourage clients to find a lender that offers the one mortgage, the mass housing mortgage product before ever being chosen or selected for an FHA loan. Once an offer on a home has been accepted, then they would contact Stash to let us know. All of our clients are highly advised to not to waive the home inspection. So we do encourage our realtors as well to encourage our clients to waive home inspections, because that is very important for first-time home buyers. And clients cannot be under agreement before joining the program. So it is okay for clients to have a pre-approval, but they cannot be under agreement when joining the program. So once they have completed these steps, the client is myself and the client are working with the lenders and the realtors to help this client close on their home. So applying the Stash grant to the closing, right? We want to collaborate to ensure synchronicity throughout the process. Again, it is a team effort for all of us, the lender, Stash, and the loan officer, to ensure that this client is getting to closing in a seamless manner. The Stash grants can be used to cover down payment, closing costs, or lower the loan amount, or lower the interest rate, right? It's pretty flexible. It's a very simple grant. Again, there are no liens on this grant. It is forgiven on day one, and the grant amount is based on the mortgage type, the property address, and other down payment assistance that's being used by the client. And so once I have gotten those details regarding the mortgage product, then I will be able to commit a commitment letter to the lender to ensure that we are able to give, a designated amount to contribute to this loan. So we work together. We have had, again, this year alone, we have had about 16 closings thus far, and we're only in April. So our clients are certainly buying anywhere in the state. And so we have a very ambitious goal this year, is to get 150 buyers into homes by December 24th. So I hope that you will be able to assist us in this journey. And my contact information are here and will be provided in the slides so that you can connect with me if you have clients who would benefit from the Stash program. Thank you so much.
Antonina, thank you so much. That was awesome. We're going to move on to Caitlin Moharn, Homeownership Programs Manager at Federal Home Loan Bank of Boston.
Awesome. So once again, thank you for the opportunity. Typically, I am working hand in hand with the banks and credit unions throughout New England, but for the audience today, Massachusetts. I'm going to put a plug into all of these programs that are being covered in today, because they really do complement this conversation that we're having about affordability and how to increase affordability. And before I start, I just want to make sure I have thumbs up with my screen.
You're
Awesome.
good.
Okay, wonderful. So just to give you a little bit of a background, so we're a little different. We do not receive money from the government. Little misconception, we're the Federal Home Loan Bank of Boston. We're cooperatively owned by our shareholders, and that is made up of over 400 financial institutions throughout New England. We're dual mission, and what we are providing is, number one, we're providing liquidity to our member banks and credit unions, and that's really just a fancy word for advances. Take that, and it's really loans. And then based on that liquidity that we're able to give out, our earnings take 10%, and then we put it specifically into our second mission, which is affordable housing and economic development. We're only regulated by the same government-sponsored entity as Fannie Mae and Freddie Mac, the Federal Housing Finance Agency. So I just wanted to give a little background to level set the playing fields, that our dollars are real, they're based on our earnings, and we go above and beyond our 10% that we are even required to do in accordance with our regulator. So we have a suite of programs. I'm going to focus on the 3 homeownership today. So they operate the same. I'm going to talk about that they're for down payment and closing cost assistance. And essentially, These are grants. They're not loans. They are forgiven after 5 years. There's no monthly P&I, and they're income eligibility based. So similar to a couple of my colleagues that have already spoken today, the Equity Builder program, that is our low to moderate income program. So that is for incomes at or below 80% of area median income. For all 3 of our programs, we do refer to the 2024 HUD income limits for this year. And it's always HUD. It's for all persons that will reside in the property. So those are out there. I know Elliot had put some information about that they have increased for this year in comparison to 2023. Our second program is the Housing or Workforce, or HOW. That's really for that missing middle. So that's slightly above 80% and up to 120% of the area median income. That is a voluntary program that we started back as a pilot program in 2019, but because it was so successful, and especially that missing middle is really struggling to buy a home in addition to the LMI borrower in New England, it's a permanent voluntary program that our board of directors has approved on an annual basis and will continue to do that, which is wonderful. The third program is Lift Up Home Ownership, or for short, LU. So this is a brand new program. We started as a pilot last year. It is income eligibility based for incomes at or below 120% of the area median income. But in addition to that, it is a people-based program. So similar to first generation, you're able to offer these mechanisms under the special purpose credit program, and you can target a disadvantaged class. And specifically, our program is people-based, it is race-based, and it is to assist people of color. We do go for the BIPOC definition of Black, African, Hispanic, Latino, Native American, Native Alaskan, Hawaiian, Pacific Islander, as well as Asian. So any of those BIPOC definitions fit this criteria, and our buyers do have to self-certify that they identify with one of these criterias. So the success and the numbers. So EBP is our oldest program. We've had it since 2003. We have over 200 banks and credit unions throughout New England that have continued to serve low to moderate income buyers. And I know Metro Credit Union is one of our sponsors for today's event. So just want to give a shout out as they participate in these programs as well. A little over 4,000 in counting, since these numbers are from the fourth quarter of 2023. And we've administered well over $58 million in that grant program. And they are separate pools of money. So how, like I said, it's been around since 2019. We've served well over 800 borrowers if we're getting current for this year. A little over 14 million in dispersed grants. And then for Lift Up, because it was a pilot program, we did offer a little over 2.5 million, and we were able to, in the pilot, reach 51 households for people of color, and majority of those households identified either as Black or brown households. We had 23 members who were able to reserve money, and because of this, we are going to continue to add this as a voluntary program. And we're actually taking that money this year and we're doubling it because it was so successful. So what's the value in our grants specifically? A lot of people have talked today about affordability and layering. So I'm going to kind of start at the bottom and work my way to the top. Layering with any of these programs, we see our borrowers layering it with either the MHP One Mortgage or even the One Boston, Mass Housing's First Mortgage, and their down payment assistance programs. We see a lot of people maximizing grants with the city of Boston and Stash, and also the Section 8 voucher housing program. So any of these opportunities today, and I'm going to borrow this from Angelo, is see these as opportunities. there's a lot of information today, but I think the goal is that it's really important to have realtors have an appreciation and advocate for fair housing. These borrowers might be able to sustain a monthly payment, but they're having a challenge closing the deal to be able to have successful homeownership. So really just layering does increase affordability. Our programs are income eligibility based, but we don't care about credit score. We don't perform asset tests. Sometimes we see ourselves sitting in fourth lien position. We don't care about loan to value or any mortgage products. Everything that's mentioned today is permissible under any of our programs. And more importantly, these are forgivable grants. So there's a 5-year lien on the property. And after that, it is completely forgiven, no strings attached. This is free grant money that your prospective buyers can have access to. Our money can be used for down payment and closing cost assistance. I'm going to put a plug in here as well, just because of the high interest rate environment. We do allow up to 2 points to reduce that interest rate to your borrower, which also, once again, piggybacks on increasing affordability. It does have to be a primary residence in New England, and that can be a 1 to 4 family. That includes townhomes, condominiums. We don't have any restrictions on condos and types and warrantabilities as other lenders may have. You just want to be mindful of those conversations when you're working with loan officers and lenders. And then cooperative housing and manufactured housing. So it really runs the gamut. And as I mentioned, it really is, we're all in for income for everyone who lives in the household. And these are ways to be able to allow all kinds of borrowers into the housing market. You will have this as a reference, but this is comparing all 3 of our programs. As I mentioned, the income limits are definitely one thing that's different. I want to focus on the grant amounts for this year. So every year it changes. So for Equity Builder, it is a little over $30,000. For the HOW program, it's $25,000 or 10% of the sales price, the lesser of the two. And Lift Up, as I mentioned, the premise is to offer a people-based, race-based program to be able to bridge the gap, the wealth gap and homeownership gap for people of color. So that is up to $50,000. So this really could change somebody's lives. We do have different down payment requirements that have to be the buyer's own money. You always have to have those conversations with your buyer and your loan officer that all of these programs we're talking about today might have differences in this, but at least you have this as a friendly reference when you're looking at any of our 3 programs. So your buyer cannot access all 3 of the programs. It's one of the 3, but the goal is really to have the marketability and feasibility for at least somebody to be able to be eligible for any of these programs. So just to share a success story. So we're so into the transactions and closing the deal, and there's real beneficiaries at the end of the day that are changed forever. They get to buy their own home. So these are actually 2 of our homeowners from last year that purchased a single family. They were living in Dorchester in a multifamily, renting from family, and they were able to buy a single family home for their daughter in Randolph, Massachusetts. They actually were able to access the MHP1 mortgage with a pretty decent rate because they are below market rate. They also were able to receive $25,000 in the Mass Dream. So layer. I say it on all my roadshows and all my calls. And really just knowing that they specifically used our money for down payments. So they were able to reduce their loan amount by $50,000 and save with our money specifically a little over $300 a month in their monthly mortgage payment. So that really is essential. That's $300 that they could put toward other things, whether it's utility bill or savings. And this is really impactful and is benefiting real people. So some misconceptions that I wanted to kind of point out about our programs is that a buyer can't refinance. That's not true. They can refinance as many times as they want, whether it's a rate and term, a cash out, or a home equity line of credit. And that really is because we want to be able to promote equity in the home. And these monies essentially after 5 years are forgiven. If they want to sell the home, they can, preferably after the 5-year retention period. But if they do before, they're never going to essentially owe back the whole amount. So having those conversations up front, and when you're seeing any deals that have this money, whether you're, on the selling side or the buyer side, these are so many misconceptions that we just want to make sure that we myth bust immediately. And then also that a buyer needs to buy an affordable unit, or in Boston, in the Massachusetts state, a 40B. That's false. We see a lot of affordable units being layered and have deed restrictions. That's fine, but they also can buy other 1 to 4 families that are not deed restricted units. Some people think that you can't use the Section 8 voucher program, the homeownership rent to own program, and it doesn't work with our programs. That's also false too. We actually had the pleasure of having, I think, up to at least 5 people last year use our program in conjunction with that. So I just wanted to share this information as well. Is this QR code actually is a home buyer flyer. It goes over all 3 of these programs. It also does an FAQ of, what are some questions that a lot of buyers have. And it also is a way to educate you as a realtor when you're having those upfront conversations. And also, what are some tips and tricks to be successful in homeownership? There's also hyperlinks to our list of approved members for this year in EVP and HOW. And in Lift Up, you should see those sometime in early May. And I just really want to say thanks for the opportunity. I hope you learned something. I really think it just takes a really motivated, passionate individual like myself and other people on today's call to be able to educate yourself, know that there's opportunity, and not every deal is a cookie cutter, but you're really changing someone's life. So thank you.
Caitlin, thank you. And your passion shines through, as does that of our other panelists. And hopefully everyone on this call, you're here for a reason, because you share a similar passion. So thank you. I do just quickly want to remind everyone, there was the question which I answered in the box. We will send registered attendees an email with a link to the video and files of the presentations. So you will have the contact information of our panelists in that. With that said, Angelo Newby, the Senior Relationships Manager at Mass Housing. We look forward to hearing from you now.
Al, thank you so much, Jared, and thank you so much to John and to the staff. And I'm going to jump right into it. My name is Angelo Newby from Mass Housing, and you see this in red, this effective date on the screen, and that's to let everyone know that Mass Housing has enhanced our down payment assistance program, specifically just in the last less than the last month. And I'm going to go through some of those programs, not all, but I'm going to go through some of those programs and just let you know what some of those enhancements are all about. But one of the things I always like to do is with our goal and our mission. You've heard a lot today about specific programs for the BIPOC community. Mass Housing has had a goal, and we're on our way to achieving that goal, and I believe exceeding that goal of all of our production being 50% of all of our production to the BIPOC community. Now, we will make a loan to anyone. We're happy to assist any low, moderate income individual or family, but we want to make sure that we're working towards achieving that goal of at least 50% of our overall production by 2026 is to the BIPOC community. Now, some of our production over the last fiscal year, especially in the regions that are covered by GBAR, has been great. We've made over almost $212 million of loans in the last fiscal year to over 584 families, and that's just in the Middlesex, Norfolk, and Suffolk counties. So we're out there. We're working with our business partners, and our business partners are those lenders that are approved by Mass Housing. We have approximately 90 lenders that are approved by Mass Housing, and we have over 60 nonprofit organizations that we work with who do the first-time homebuyer classes. And one of the things that we always want to make sure that we pass on is that that consumers do not come directly to this. So when you have that consumer who may be working with you and not familiar with Mass Housing, let them know that they need to build a team, but they also need to choose a lender. And we have over 90 lenders that we work with across the Commonwealth. So our down payment assistance, the enhancements that happened on March 18th was that we removed the incumbents of first-time home buyer at 80% or less of area median income having to buy in a gateway community. So we removed that. We also have a fixed loan amount, and these are loans, these are not grants, of $30,000. Zero interest deferred. So there is no interest on this loan. It is deferred, the payment is deferred, so the DTI is not affected. So in essence, what you have is an opportunity for first-time home buyers to have more buying power. Zero interest deferred. They do not pay back this loan until they either pay off the mortgage, and if it takes 30 years to pay off the mortgage, it takes 30 years. Refinance the property, or they sell the property. So this particular program, the Workforce Advantage 4.0, newly enhanced on 318, $30,000, single-family condominiums, 2s, 3s, and 4s now. We've added 3s and 4s, 2s, 3s, and 4s. If you have someone who is interested in purchasing a multifamily, they do have to put down a minimum of 5%, and 3% has to be their own funds. With mass housing, actually, a buyer can put down 0% on a condominium or a three-family, but, excuse me, a condominium or a single family, but of course, that increases their mortgage amount. And we're all about home ownership, stable home ownership. So 0% down probably is not going to work for a first-time home buyer, but it is an option. Then we have our first-time home buyer option. This is $25,000 now. And again, across the Commonwealth, there's no limitation on where the buyer can purchase the home. Now, because we are dealing with a higher income level and all of our programs are income-based, this particular down payment assistance program, single families, condominiums, 2s, 3s, and 4s, has a 2% interest rate. So there is some effect on the DTI. It's a $160 payment over 15 years. None of our programs have penalty payments. So these loans can be paid off early. As I've heard mentioned in some of the other programs, and they're all wonderful programs. Mass Housing does not have an asset test on any of our programs. So there is no asset test on any of our programs. So I think from a first-time home buyer perspective, that we're trying to remove some of these obstacles. And we know that down payment is one of the biggest obstacles for those first-time home buyers. A lot of information here, but what I want to focus on is the discounted interest rate for the Workforce Advantage, zero interest deferred, no loan level price adjustments for any of Mass Housing's programs. That's a big one. No loan level price adjustments. Credit scores. We've heard credit scores kind of mentioned. You know, there's some programs with no credit scores. Well, with Mass Housing, we have one credit score, which is a 640. So removing some of those obstacles as we move along, one credit score for all of our programs, and of course, Mass Housing's down payment assistance programs, as was mentioned with all the other wonderful programs today, can be layered. So you can layer a Mass Housing program, whether it's the $30,000 program under Workforce Advantage or the $25,000 program under our first-time homebuyer program, and the Mass Housing program can be layered. And not only are there the wonderful programs that we heard about today, there are lenders out there that offer down payment assistance in conjunction with a Mass Housing loan. And there are cities and towns that have their own down payment assistance programs that can be layered with a Mass Housing loan. So the income limits. The income limits have gone up. We have not adjusted ours yet. We're a little bit, ours come a little bit later in the season, so probably another month or two before you see any increases with Mass Housing. The Workforce Advantage program that I mentioned, which is our Tier 1 program, does have the 80% or less of area median income. And because of some of the resources that we use with this program, we do have to look at household income and family size. This is the only program we offer. It is the only program that we offer that does look at household income and household size. This is just a sampling. One of the things to remember to pass on to that first-time home buyer is that we base our income limits on where the prospective buyer is purchasing the home, not where they're currently living. And then we move to our first-time home buyer program. And again, as you see, the credit score is 640. Mortgage insurance, and I'll mention mortgage insurance a little bit later, but the mortgage insurance benefit offered through Mass Housing for our 80% and lower income buyer, 100% of the cost of that mortgage insurance is covered by Mass Housing. 100% of the cost is covered by Mass Housing. Again, with the first-time home buyer program, no LLPAs, loan level price adjustments here. This is a great program because the income levels for this particular program have increased. And we're still using the 2023, 2024 numbers. But as you can see, the income levels have increased here for the first-time home buyer program. And under this program and under the Mass Housing mortgage program, we are only concerned about the income of the borrower. We are only concerned about the income of the borrower. So here you could have collectively two individuals who earn over these income limits. But if one borrower can qualify under his or her own income, you can use that strategy in order to get that family or that individual into a home. These are the Fannie Mae, and Mass Housing uses both Fannie Mae and Freddie Mac. And we have lenders who use both government sponsored entities. So what we're looking at is variety and opportunity. And we offer that to our partners also. So when you have that borrower that comes to you and they're wondering, well, what are the opportunities that are available to me? Mass Housing offers probably the widest level of opportunities and widest menu of programs available to that buyer, from 80% up to 135% of area median income, and also working with the multiple organizations in order to layer the down payment assistance, and multiple organizations in order to offer the best program to that consumer to give them the choice that they need. And at that 135% of area median income, as you can see, this income levels are significant by county. And again, we're looking not at family size here with this particular program. We're looking at only the individual who is going to be on the mortgage. I mentioned that we have no asset test. Also, our programs can be used for lottery, 40B, deed restricted programs. Of course, the client has to adhere to the underwriting guidelines of the organization or the developer, but then Mass Housing again will assist. I add this map in just to give you some perspective on the gateway cities. And for one program, which is the highest level program, the 135% of area median income, if we have somebody who would like to utilize our down payment assistance program and is at that higher level of 135% of area median income, they must buy in a gateway city. So this is the only program where we do somewhat restrict the opportunity to use down payment assistance if you are at that higher level of income. And the loan officer is going to sit with that consumer. The loan officer is part of that team that consumer is going to build, and will go into detail about the specifics of our program. A mortgage insurance. So as I mentioned, under our Tier 1 program, the Workforce Advantage, 80% or less of area median income, 100% of the cost within that program is covered by Mass Housing. But this is an added advantage to that home buyer who may be concerned about the loss of job. Well, Mass Housing has this program. Many have tried to replicate it, but they cannot do the job that MI Plus does. Up to $2,000 a month in principal and interest will be paid on behalf of the borrower if they lose their job and are able to collect unemployment. That's the trigger. Can you collect unemployment? We all know what happened during COVID. Tens of thousands, hundreds of thousands of individuals who lost their jobs. Mass Housing has paid out over $1 million in order to keep those individuals and families in their homes. These consumers, these homeowners, they pay back zero. They pay back zero when this benefit is used, up to $12,000 in benefits, so that these individuals and families are not raiding their savings accounts, using credit cards, or borrowing from family members. MI Plus, a great part of the offerings from Mass Housing. Over 94% of all of the mortgages that we offer carry MI Plus, so it's a great benefit for those folks. And then we have our team. We have our team of dedicated housing advocates and individuals who we are across the Commonwealth. We speak English, we speak Spanish, we speak Italian, Cape Verdean, Chinese, Mandarin Chinese. We are here to assist, we are here to serve your clients or you. Our membership at GBAR can reach out to these individuals 9 to 5 during the week via our 888 number, or you can email us if you have a specific question at homeownership@masshousing.com. Visit our website, masshousing.com. I would suggest that you all also subscribe to our newsletter. Visit masshousing.com, subscribe to our newsletter. I subscribe also. It's a great way to keep in touch with what's going on at Mass Housing and what's going on across the Commonwealth. And lastly, I would like to mention the MCCB, the Massachusetts Community Climate Bank. Massachusetts Community Climate Bank, which is coming online soon. And this will be an opportunity, especially for the GBAR membership, to assist those homeowners who are looking to upgrade their home, looking to make their home greener. Maybe they're thinking about selling, maybe they're thinking about staying, but this will be an opportunity to utilize resources that Mass Housing will be managing to make a more efficient home, and to keep the cost down low. And that's something that we all want to do. But the Mass Community Climate Bank will be coming online within the next 30 to 45 days. And there will be resources that will be available to assist current homeowners in order to make their homes more efficient. So I want to thank you. That's the last slide. And thank you again, Jared. The end of my presentation.
You're welcome.
Stop sharing.
All right, thank you, Angelo. And we've got the Chief Programs Officer from Metro Housing Boston, Josh White, who's gonna share with us now, and then we'll get to the Q&A.
Fantastic. Thank you. Really appreciate the opportunity to speak with you folks today. Always excited to share about the great work that's happening at Metro Housing and how we may be able to work with folks like yourself. For those of you not aware, Metro Housing Boston is a housing assistance stability nonprofit. We're primarily known for our rental assistance voucher programs. We provide a variety of vouchers. Most commonly our Section 8, which is a federal voucher that can be used anywhere in the United States, our Massachusetts rental voucher program, also known as MRVP, which is exclusive to the state of Massachusetts, and our VASH vouchers, working with homeless veterans here in the state of Massachusetts as well. So to give you a little bit of an idea of the work we do, we serve over 10,000 individuals within our voucher program. We have over 5,000 landlords and property managers that we work with. And last year alone, we paid out over $214 million in rental payments. So a lot of great work happening within the organization. In addition to our rental assistance program, we also provide financial assistance services And I'm here to talk to you today about one of the programs that we do in that department, and that is our residential assistance for families in transition, more commonly known as RAF. So let me just share with you my screen. Perfect. So as I said, here at Metro, in addition to housing services, we also provided financial assistance within our RAF program. Last year, we served over 10,000 tenants within RAF and paid out over $63 million in RAF payments. The RAF program has always been a program that's targeted homeless prevention. As you may recall, during the COVID pandemic, there were a number of individuals and families that unfortunately lost their job, and their housing was in jeopardy, and the RAF program was created to ensure that rental payments and utility payments were able to be made. For this year, an applicant in accessing RAF can receive up to $7,000 within a 12-month period. Now, individuals do not have to ask for the entire $7,000. They can ask for a certain dollar amount, but their max is $7,000. So when they hit that number at the 12-month period, they unfortunately are no longer able to request any additional RAF payments. The RAF program, families or households can receive RAF up to 50% of their annual median income. However, if an applicant is a domestic violence survivor, they can receive up to 60% from their AMI for RAF. All applications or all tenants that are applying for RAF need to have an eligible housing crisis with proper documentation, and I'll review that in a minute. And applicants must have a notice to quit from their landlord in order to receive RAF rental assistance for any arrears that they may owe. In addition to that, RAF may also pay up to 6 months of rental arrears for subsidized tenants, not stipends. So if someone living in a unit has a voucher, they may also receive 6 months of rental arrears. And then a new part of the RAF program is for those that may be moving or have loss of furniture, they can also request furniture. They do not receive vouchers. They receive monies that can go to paying for furniture as well as movers. For the household, the communities that we serve that are eligible for RAF, this is a breakdown of the annual median income in order to qualify for RAF payments. Below are the communities that we serve within RAF. I want to be very clear, though, that for RAF, it does not have to be a client of Metro. The general public can apply for RAF payments through Metro and does not have to be receiving any additional services to us. For those that are interested in applying for RAF services, the individual or landlord would need to go on to the DHCD, now known as the Executive Office of Housing and Communities, Livable Community, to fill out an application. Once that application has been submitted, the landlord would be notified, and then it would be their turn to complete their portion of the application. Now, also, landlords have the ability to apply for RAF before the applicant, and it does not require the tenant to apply for RAF. A landlord may also apply on behalf of the tenant. However, the tenant would need to respond to that application and fill out the necessary paperwork in order to qualify for the RAF payments. Once that is done, the property owner will create their own profile. They need to submit a W-9, proof of ownership, and ID. The reason we ask for this type of documentation is that unfortunately financial assistance programs like RAF are prone to fraud. So the proof of ownership is not the only thing that would make them eligible. We also need that W-9. Once the document or once the application has been submitted, my chaser case management team will review the matched application within a 48-hour period to determine if all documents in the application has been completed totally. If it has, the chaser team then moves on to the next stage of the process, which is assigning to a RAF case management. If it is incomplete, the chaser team will reach out to both the applicant and the landlord to notify them of what is outstanding and what we need in order to move forward in the process. Now, another point I want to be very clear is when it comes to applying for RAF, this is a timed application process. So if there is anything outstanding or incomplete, and if we don't hear back from you within a certain period of time, the application is what we call timed out, and will be denied, and either the tenant or the landlord would need to reapply and start the process all over again. But if the application has been submitted with all the documentation and has been completed, then it is assigned to a case manager to process and then to hopefully get the approval out within 2 weeks to 10 business days. Once we are receiving the final approval, a letter will go out notifying you that it's been approved, and then payments will be sent out to the property owner or to the landlord. Payments are never sent to the tenant. They are always sent to the property owner or to the individual where the outstanding debt is owed, whether it be utilities, rental payments, so forth. So the required documents in order to complete a RAFT application is, again, the application, the identification of the head of household who is applying for the RAFT payments, verification of housing. The tenant will need to provide a lease or some type of agreement with the property owner, what their housing crisis is, and again, I'll go through that in a minute. Verification of income. Are they receiving an income through a job, through benefits? If they are not, are they able to provide a zero income verification? And then for the landlord, a W-9 by the property owner or an authorized agent property management company, and then as well as an ID from the property owner. That proof of ownership of. Some of the examples that determine if someone is eligible for a housing crisis, they've received a notice to quit from their landlord or property. They are in the process of being evicted. Unfortunately, someone has lost a unit and now they have doubled up and they must leave due to overcrowd. Are there health and safety issues within the unit and they are forced to move? Are they a survivor of domestic violence and need to leave the unit for safety? Has there been a fire, flood, or natural disaster in the unit and they are forced to move? Have their utilities been shut off due to lack of payment? And if there are other crises that will result in imminent housing loss, we will accept those as well. In order to apply, this is the website above. If you are unable to fill out the application for RAFT, reasonable accommodations can be made. However, they would need to be done through our housing consumer education department. We hold workshops on a weekly basis here, as well as one-on-one appointments to help both landlords and tenants fill out a RAFT application. You may contact our housing consumer education center at the email labeled above as a resource line, and then we would schedule an appointment for you to come in and fill out the application as well as get it submitted. If you have submitted an application and are looking for the status and where it is, you may reach out to RAFT status at metrohousingboston.org. This is for not only tenants, but also advocates and property owners, and also possibly attorneys that may be helping on behalf of the tenant. You just need to include the application number that you would be assigned, your date of birth, and the zip code in order to receive a status update. And you will receive that update within an 8-hour period. We're very good about ensuring that we are getting back to both tenants and property owners when it comes to RAFT applications. And again, what can RAFT payments pay for? Arrears and future stipends, 1 month stipend for a non-subsidized household, utilities, including gas, oil, electric, and water. It will not pay for things like cable and internet. Those are viewed as luxuries, not necessities. Furniture, if it is eligible, we are able to pay for movers if the individual requires a new fridge. If someone needs to move to a new unit, we are able to use RAFT payment for security first and last. Unfortunately, no broker fees. And if there's any other payments that do not fit within the housing crisis, a request may be made to the RAA like Metro or to EOHLC, and they can determine whether or not they qualify. And if you wish to learn more about RAFT or just sort of our other programs, you may reach out to Metro Housing Boston at our website. We have a variety of information, not only regarding RAFT and our financial assistance programs, but also our leased housing and housing supports department.
Josh, thank you so much. Appreciate it. Appreciate all of you. Before we get to the Q&A, which, by the way, thank you, Karen. I see you've been typing some answers to people. I appreciate that. I have as well. We are cutting it close to our 12:30 time that we were aiming to end. So if people have to hop off, we totally get that. But I want to let John Dolchewski, our Executive Vice President, speak about our, for a few minutes about Agent EDU. Go ahead, John.
Thank you, Jared. And so, yeah, I just want to remind members of our newest member benefit. It was launched back in February, and it's a video training library that we have partnered with Agent Publishing, the producers of Boston Agent Magazine, on. It's a program that is really meant to supplement all of the continuing education courses, designation certifications, courses that we already deliver. But as you can see on the screen, there are a variety of topics. Over 60 different courses are available for members, and these are at all experience levels. So they've been organized or structured by essential, advanced, and master classes. So think of it based on your involvement in the industry. So somebody newer might take it essentials, and so forth. There's also a number of courses for real estate assistance. So if you've got folks part of your team, or you've got assistants within your office that are brand new or just need some additional training, look at the video training library as a resource for them as well. But this is really a place to enhance your industry knowledge, learn new strategies and best practices on your own schedule. So the video library is there under the Education and Events tab on our homepage at gbar.org. You'll find it in the drop-down menu, very easily to access. It is, if you were to go out and purchase on your own, it's about $100 to do that. So we're including that in membership this year. And the other thing I want to mention, and I'll put one more slide on the screen here, just a quick look at when you log in to the program, this is sort of what it will look like. There will be an email going out actually tomorrow to the membership reminding you about this. So very easy to access. Just check your inbox tomorrow and you'll get further communication from Agent EDU next week. I also want to put in a plug, Jared, if I could, for the Accredited Buyer Representative course we have coming up. Members may have heard that that course is being offered for free this year as part of an initiative through the National Association of RealTours. The distinction between the ABR course you would take online through NAR versus with us is that there are 10 continuing education credits, which is a biggie, obviously, and you'll get instruction that is specific to Massachusetts state law. So the ABR course that talks about buyer representation, communicating your value to consumers, how to put together an effective buyer consultation, explaining the buyer representation agreement with consumers. All of that will be sort of presented nationally without respect to state law, but obviously in Massachusetts, we're going to be very specific to that. So that's the benefit for that. The first class that's coming up of the ABR that we'll be offering this year is May 21 to 23 online. So it's 3 mornings. And again, completion of the course is going to get you 10 CE credits. So be sure to check that out again under the Education and Events tab on gbar.org.
Thank you, John. And so we had 8 questions that have literally all been answered. So I appreciate that, but I'm going to quickly run through them just in case anyone didn't see that their question was answered. And if anyone else has anything to chime in, you can. Again, I know it's 12:30, so if people have to hop off, we appreciate all of your time. To the panelists, thank you all. Just going through these, it was asked if there were any credit score limits, requirements for programs. Antonina and Karen both said that it's a 640 credit score, and then Karen said for 660 for multifamilies. Caitlin said FHL Bank Boston programs do not have any credit score limits requirements. They looked at the first mortgage lender. I don't know if anyone else who didn't answer wanted to chime in.
So
Yeah,
just to
that-
clarify, the 660, it's for MHB, but Angelo Mass Housing, they do a 640 credit score for all property types. So for MHP program, single and condo 640, multifamily 660.
Thanks.
Okay, and Elliot, that question did come up initially when you were speaking, and I think everyone wanted to know for each of you, but Elliot, if you can chime in also, please.
Yep, 640, same as the city, 640 for a single or condo and 660 for a multifamily property.
Awesome. Karen was asked if for Boston Home Center, foreclosures seem to be increasing. Are you monitoring registry filings for notices to foreclose, to reach out to offer consultation? Karen said their policy development and research department does monitor the registry filings and immediately notifies BHC. They send out a letter to homeowners with their contact information and info on services that might be able to assist them. So thank you for that. We were asked, I know Karen and Caitlin, you both shared links of lenders that participate in these programs. I don't know if anyone else has any different lenders and you want to share that in the answer box, or provide that to us and we can share that with the members here as well. But thank you for that. And each of the people, as I mentioned, we were asked if people would be willing to host a learning session for their community, for their office, anything like that. And it sounds like most of you have said you definitely would. So I appreciate that tremendously. And I'm sure folks will reach out to you because, again, you'll receive a link to the video. You'll receive the slides from the presentation, and that's going to have their contact info so folks can reach out to you there. Were there any other comments that anyone needed to make based on questions that they saw or that comments that were made by any of the other presenters? All right. Well, then I want to thank everyone for coming. John did also just put it, or someone just put in the chat box, the registration link for the ABR course that John spoke about. Thank you everybody for coming. Thank you for our panelists. All of you are doing such amazing work. I know that Caitlin, you said that your programs can change people's lives, and they truly can. All of these programs that all of you are speaking about and doing, you are changing people's lives. So thank you very, very much. With that said, have a great day, everybody. And thank you for joining the RealTour today.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you all.